Hey guys, welcome back to the channel. In my previous video, I broke down in a video what people need to know about the VA loan. This is a government program to assist veterans in buying homes. And while researching that video, I came across this clip about Dave Ramsey. And he and his associates like Chris Hogan are very consistent in their YouTube videos that the VA loan is bad. You should avoid the VA loan. Don't use the VA loan. So I want to show you this clip and then we'll break down exactly what's happening with Dave Ramsey's philosophy and why he hates the VA loan.
Question one is, being in the military, the concept that you guys have in your book that we've read is that the income is your best building tool. The allowance for housing that we would get if we were to live off base would actually allow us, afford us the opportunity to be able to get a home, but we don't know how to do that, if it's either through the VA loan or through the FHA loan.
Okay. Neither.
After writing all this out.
Okay, here's the thing. Neither. Both of those are the most expensive loans. The VA is the most expensive conforming loan unless you're a disabled veteran. The fees and the gotcha things that they built into it make it an unattractive loan, which is sad because it's supposed to be a benefit for you guys that have served, and thank you for your service.
And that's all he pretty much says, the fees and the gotchas. And then he quickly moves on and starts preaching his own philosophy on what people should be doing for mortgage loans. So a quick recap for people not familiar with the VA loan. This is a government program through the VA which helps veterans purchase homes with no money down. Normally, if you go to a mortgage lender to get a mortgage loan, you're going to have to put up collateral. You're going to have to put up a down payment of between 10, 15, and 20%. Usually, you need greater than 20% to avoid PMI, private mortgage insurance. What the VA is doing is they're securing your loans. They're telling the lenders, hey, if this veteran for whatever reason stops paying their mortgage and they're foreclosed on, we will guarantee up to 25% of the value. So that equivalency of 25% is like you having a 25% down payment when you apply for the loan. And this is very attractive to veterans who are first-time home buyers. No money down is a fantastic deal. Also, no PMI, as I said. There's no limit on the loan amount from the VA. You have easier loan qualifications if your credit history is short or thin. You should be getting favorable lending terms. The VA will help you negotiate this with your realtor and the seller of the home. In addition, you can call the VA if you get in financial trouble and you fall behind on your mortgages. There's certain things that the VA can do to assist you. But what Dave Ramsey will only mention is the fee. So how bad is this fee? Well, if you were to put zero money down, and this is the first time you use the VA loan, the funding fee would be 2.3% of the mortgage. So if the home costs $200,000, 2.3% of that is $4,600. You can either pay this at closing costs or you can roll it into the cost of the loan from the bank, and then obviously you'd be financing that and paying that down over time. So why does Dave Ramsey hate the VA loan? Well, you kind of have to understand his philosophy with his 7 baby steps. And this checklist, you know, what he's written in his books, this is a one-size-fits-all. Nobody is allowed to deviate. So step 1, you need to build a $1,000 emergency fund. 2, you pay off all debt using the snowball technique of smallest to greatest. Then you need to save an emergency fund of 3 to 6 months worth of expenses. Step 4 is start putting 15% of your income in retirement accounts. Step 5 is college funds. Step 6, pay off your mortgage. Step 7, build wealth and give. And it's actually very easy to simplify his whole philosophy, and it's just this: stop buying stupid stuff. On his channel, he's very careful not to tell his listeners, hey, you need to make more money. Realistically, for a lot of people, that's not easy. However, everybody can find ways to spend less. He teaches people to change their spending habits. Stop taking out loans, stop going into debt, cut up your credit cards, stop losing your wealth to the banks in interest payments. But step 6 is pay off your house. That is the final form of debt that Dave Ramsey tolerates. And when he stratifies this, he even puts saving for retirement before getting 100% out of debt if you have a mortgage loan. So what is happening here? In step 2, It says pay off all debt except for the house, which means that Dave is assuming that people who come to him are already homeowners. And his logic is, well, they already have a house. That's unfortunate. They could sell the home, use the equity to pay off all their debt, but he knows that that is a financially terrible decision. And additionally, it's just an emotional loss for that family if they have to give up the family home to commit to paying off their other debt first. So he's not going to ask people to sell their house unless they have way too much house. So what do you do if you don't already own a house? What if you go to Dave Ramsey to follow his method and his plan, and you're currently renting or you're currently living at home with family? At what point in these baby steps do you get to apply for a mortgage and move into a house? It's not on the list. If you read his book, it actually is in step 3B. So once you've paid off all your other forms of debt, and once you've saved an emergency fund of 3 to 6 months, you're then allowed to start saving for a down payment on a house so that you can buy your first home. And that's before all the other steps. And I would even say for Dave Ramsey's listeners, this is difficult to swallow. You know, owning a home has been so integral to the American dream for so long. And when you think about what is the largest pool of wealth for the average American family, it's not their 401k, it's not their portfolio and brokerage account, it's the equity in their home. For the average American family, the equity that they build by owning a home over 10, 20, 30 years is their largest reservoir of wealth. So to tell people that they need to get 100% out of debt, paying off a car loan, student loan, any other kinds of debt, and then save 3 to 6 months worth of living costs, and then begin the process to save up 10, 15, 20% for a down payment on a home, this is extremely deterring for people that want to follow Dave Ramsey's plan. And the reason why is because the math is bad. When you think about how long would it take you to follow Dave Ramsey's plan, let's say it were to take you 4 years to get through step 3B, where you finally have the down payment to buy a house properly. So if you think about if you're renting and you're living in a $200,000 home, and the rent, we'll just say it's $822 a month. That's pretty low, honestly. I know a lot of people watching, your rent is higher than that. But over a 4-year period, that cost you $39,000, $39,400. That's $39,000. That's poof. You know, your landlord got that money. They're living on that money. You're paying the mortgage for them. Versus if you had just gotten into a home. You bought a $200,000 home with an interest rate of 2.81%, 30-year fixed rate. Over a 4-year period, while you were, otherwise saving up, you would have built about $18,000 in equity in the home and then paid $21,500 in interest. Now I know that that's a gut wrench. Oh my gosh, I paid more in interest those first 4 years on the mortgage than I did paying off the mortgage itself. But if you were renting the exact same place for 4 years, then you just would be out 100% of what you paid. So what is going on here? The VA, the government, is trying to help veterans get into homes so that they can start building equity. Maybe obviously living in a home is more preferable or comfortable than living in an apartment or renting a house. But why is Dave Ramsey being so mean to veterans? Why won't he let them, maybe after step 1 or during step 2, get into a VA loan so they can get in a house and they can stop renting? Well, for Dave Ramsey's whole philosophy, there can be no exceptions. This, this 7-step, baby step process, it might as well be on, clay tablets. This is like the 10 Commandments to him. There can be no exceptions because if he allows for exceptions, if in his book or on his radio program he has to say, well, there's this thing called the VA loan and that's an exception, then other people will say, well, then maybe I'm an exception. Maybe I don't need to follow this or do this, and I can be the exception. When you allow exceptions, everyone then believes they're the exception. So let's go through the real reason why Dave Ramsey hates the VA loan. And first, government involvement is bad. This is just his general conservative libertarian philosophy. And if you want my opinion, if the military is not being effective or efficient with its resources, then we need to find the political will to make it more effective and efficient. If the VA is not being effective and efficient with its resources, then we need to find the political will to make it more effective and efficient. If the VA loan sucks, then let's change it. Let's find the political will to improve the program. He's not offering solutions because he doesn't want any. He doesn't believe the government should be doing anything. Next reason why Dave Ramsey doesn't like the VA loan, because it makes it easier for the person. That's the whole point of the program, is to help veterans get into homes. But if it's easy, then you did not learn anything. Pain corrects bad behavior. Dave on his channel frequently talks about pain and how pain is required to change bad behavior. I'm not saying he wants you to suffer. He has your best interests in heart. He's trying to help you. But he knows that suffering is required for you to change how you've been living your life. He wants you to save more money, spend less money, find ways to earn more income. And if the government's just going to come and help you get into a home, then you actually didn't change your behavior. Whatever you were doing, where you didn't have the money saved for a 20% down payment on a house, Dave doesn't want you to take that shortcut because he's afraid that you didn't learn anything. He's not actually helping you. Which comes to the very legitimate concern of being house poor. And this is a real thing. Dave does talk about this, and this is legitimate. As an example, let's say you go out house shopping and you see a $200,000 house, which is perfectly fine, it's pretty decent, and then a $300,000 house, which is very nice. The normal constraint on you when house shopping is how much you have for that down payment, usually about 20% for a conventional loan. So if you've been living in an apartment or living with family, saving all your money, and you just got to $40,000, you can afford a $200,000 house. You can't afford the $300,000 house. But with a VA loan, you don't have to have any money down. So what's the difference? F it, go for the nicer house. Normally, that nicer house should have required you to have saved $60,000. And to do that, you would have, changed your behavior to save that wealth. So I think Dave Ramsey's real concern, his legitimate concern with veterans, is they're taking on more house than they can afford long term. They should have been getting a starter home first, but they ended up, buying their dream house because it was no money down. Experts will usually say that your mortgage costs should not exceed 28% of your pay. There's a lot of different factors that can go into this. I just wanted to point out this legitimate concern about becoming house poor when no money down, there's nothing stopping you from getting the more expensive house. And there you have it, guys. Those are the reasons why Dave Ramsey does not like the VA loan. And I think it's unfortunate because for a lot of veterans, I think the VA loan has done a lot of good and makes a lot of sense financially to get people into a home so they can start building home equity. Unfortunately, yes, there are people who are going to be responsible with the VA loan. And if anybody at all is causing trouble, then Dave Ramsey has to take the most conservative routes. So his attitude is, I can't deviate from my plan at all. I have to have a one-size-fits-all. So if there's people that would use the VA loan wrong, he can't create an exception for people that would use it well. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. In addition, consider subscribing to my channel if you haven't already. If you have any comments or questions, leave me one down below. I love hearing from you guys. Until the next video, take care.